Everything I'm sharing is educational purpose only. Everything I'm sharing educational purpose only. Please do your own due diligence before you invest in market. So let's talk about what's happening today and what happened last week. So one of the thing that what you are looking at in this diagram, where that household savings. So if you look at this since December 2016 till now, look at that 2016 till 20, here August 2023. The diagram shows you that at around December 19 or during pandemic time, you see that people had a good amount of savings. And April 20, the savings personal savings rate means people were invest say saving more money than spending around above. You see the 30, the indices where that pandemic time also during that December and 2021. At that time, also a lot of people have had savings, but then we know what happened since then. Um, Inflation went up. Think people didn't have a job, but at the same time, also when things were expensive, people could used their savings money to get by. So now, one of the things that you might be looking at that April, since August last year, December this year, 23, April 23, August 23, that what they're seeing that people at some point this year, earlier this year, people had again savings, so people saving, but now we know inflation is going down, but it's not there yet, but the savings fund is going down. So this is not an alert yet, but when it comes to GDP, that a consumer needs to have enough money in order for people to buy whatever they need. So that's something now market is watching, economics are watching. So next, what you're looking at consumer credit balance. What you are seeing that starting December 2008 till now August 2013, we know that during 2007, 28, that we had financial disaster during that time. A lot of the consumer credit card, people who use credit card and buy things, those credit balance was slowly was going down. Means people were not spending, borrowing, getting that many credit card or using that credit card money to get by what they need to do. But if you are looking at that number, that consumer credit card balance, people who is carrying the credit card using, buying more than what necessary, is going up since December 2012. Around that time, if you look at it, it's going up till to August 2019. It's going really high. It came down during pandemic time little bit. Again, from pandemic, during pandemic till now, people are getting relying on more and more credit card. So their credit card balance, and people are having one or multiple credit cards in order to buy whatever they need. So people are carrying those extra credit balance limit, is you can see, is almost like all-time high, over $1 trillion. People, consumers are borrowing those money. So that's something is really alarming right now in the to the economist. Okay. Um, Here what you are looking at, that the loan auto car, that yellow represents the auto car balance, and the blue one represents the credit card. You have credit card balance, but you are not able to pay it on time, and delinquencies happens 3 months or more. If so, all now when it comes to paying off those debts, and people are not paying, able to pay off those debt, on time, and then 2 months, 3 months, there's it's almost like 2007, 28, that a lot of people are borrowed more money than what they need and had all the extra spent in certain areas. So same trend they are seeing starting last year April. If you see that, April 2022, June 2022 till October 2023, this credit card, the balance people are not able to pay on time last 30 days, 90 days, or delinquencies also is gap is going higher, where same thing they are seeing in auto industry as well. So this is us is something economist is watching, and you see even today, last week at some point, Powell came out and said, there are some indications showing the slowdown of GDP and growth. Consumer is one of the big concern they're seeing. And here, consumer credit card balance climbed. You can say what I just showed you, over $1 trillion. You see August 28, December 28 till at some point April, people are very good at not to have carrying that much credit card balance. And now you can see how quickly it just jumped on April till now. It's over $1 trillion that balance. So Federal Reserve credit card debt is big concern. Consumers are spending way more than necessary. What you're looking at this one, that yeah, that loan officers, when they try to get a loan, especially the small business, that are small, medium, and that large business, that they try to get the loan, and how easy that good loan, or how much they're tightening up to getting that loan. Your credit card, you can get it, and then you pay a very high interest rate APR that. But when it comes to investing in economy and growing the business, small business owners, that when they go to get the bank loan, that you see that since October, February, October 2019, February 21, 2011, pandemic time, it's really tight for people to get that the restriction to get the loan for a small business, those small shops. But later on, that we know in the economy, a lot of money that government put in the money, people got that extra stimulus package, and that extra check came in, and then money got floated in the economy. Yes, that time is slow down, but again, you can see that since after that stimulus money stopped, slowly again, that they are looking at that people bad behavior of spending money, and make sure bank is a bank also is getting affected with their profit margin. They are tightening to make sure we do not head into another 2007 28 financial crisis that we have seen. Yeah. So you see, it's getting closer, it's getting tighter and tighter. We do not know with this rate, is this going to go just like what we have seen pandemic time or before. But this is another thing that loan officers and that Fed and market is watching, that it's not easy for business owners to bring money in the market. Now that what you have seen that consumer and the business are having certain behavior or certain restriction to get enough fund in the market. Let's see what happened to market last week. Overall, still last week in the market did pretty good. Nasdaq has over 5% growth. Still now you see year to date Nasdaq is 15% growth. Nasdaq is 31% growth. Last week, Nasdaq 2.4%, S&P 5%. S&P did pretty good last week. And then year to date, Dow Jones also 3.4%, although, but Nasdaq is still all time the growth, over 30% growth in year to date. It's pretty good. So market did well overall last week after a long time. What this coming week that I wanted you take a look at this the technical analysis where that Schwab um, the this information I got from the Schwab, that those who is watching Charles Schwab and then their analysis, that you can see that this technical is starting 20 that August, September, and November each month. Where is S&P, that SPX? If you look at the SPX trend, you see that whole time you is following with this channel. It stayed at some point. It tried to go over 4,500. It then came down to 41 somewhere for below 4,200, and then recently it came down below 41, and you see that in it. But it stayed above 4,000, stayed around for 4,100, and came at the bottom. Now you see it came up and it had it in the gap. It came down up and then the gap. And now what is doing last, if you look at last week, that it's trying to consolidate this bullish trend. So we'll see next few weeks that if it can stay this consolidated, this bullish trend, that there is a chance that it can go back to again above 4,500. But we know that in the past, what I shared, that market usually in November, December, it does well. Again, in January, different scenario. So let's see if this bullish trend stay continue like this. But so far, technical says it might.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.